What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at the ever so popular S&P 500 ETF SPY, ticker symbol SPY, on a variety of time frames in anticipation of the next trading day, Tuesday, May 14th. All right, guys, so SPY here today, Monday, finished the day up 7 cents per share. That's plus 0.01%, essentially a flat day. It's currently down a little bit here in the after hours. Listen, volume's low. Take that with a grain of salt, wherever that may end up here tonight. But listen, let's take a look here at, I suppose, kind of the broader market as we head into tomorrow, Tuesday, and get the best idea of what's to come as we possibly can, looking at everything the market was willing to give us today. First of all, guys, tomorrow morning, 1 hour before the market opens sharp, so, you know, that's 8:30 a.m. Eastern time, and just adjust for your time zone, we get PPI, okay? Now, PPI, in case you're unaware, that's that wholesale inflation read. So really quick, the forecasts for the headline year over year, 2.2% is the forecast. Headline month over month, 0.3. Core year over year, 2.3. And core month over month is 0.2%. So those are the numbers to beat here tomorrow. And I'll be watching that 1 hour before the market opens. But let's take a look. We're going to take a look at the volume profile. We'll look at the psychological levels. Big money's watching those, so we're going to have to pay attention as well. We'll look at implied volatility. And then we'll look at what is the market saying about the expected move for tomorrow and the directional bias for tomorrow coming out of the chain today. So let's get started here on the 5-minute looking at that volume profile. By the way, listen, if you guys are new here, SPY is a daily upload. So my goal here is 10,000 subs. I know we can hit it, not without your guys' help. So I appreciate you subscribing to the channel, and I'll keep the SPY videos coming every day. So let's do this. What we're really doing here is looking under the hood, trying to pull out any bias that isn't exactly clear from the price movement. So it's essentially a flat day. However, we popped in pre-market on lower volume, right? And then we faded during the intraday session on the intraday volume, which is of course going to be higher. So what we're really looking for here is if you're a bear, you want to see bearish bias supporting the intraday bearish movement, okay? Because we opened higher and faded for a lot of the day. If you're a bull, the intraday session already saw some downside movement. So ideally what you would want to see, best case scenario, would be hidden bullish bias, though it's not entirely likely. We'll take a look. What you would really want to see if you're a bull is on this intraday red movement, you would want to see no bias at all to support the bears. Okay, you don't want to give them what they want. So let's pull this up and take a look. You can see here, the open is quite normal. High volume open, fades off quickly. It actually holds a little bit deeper. It's not so much of a kind of an easy down ramp fade, but the green volume's a little lower, kind of had a similar look. Moving through the mid-morning, we get a couple of pops. Yeah, those too much of a risk of fooled by randomness on those. I don't like to assign bias to just single pops. We'd be here all day. And if we go here, you can see that during this little dump off and then quick recovery where we hit the intraday low, we of course saw volume pick up. However, it picked up just briefly on these red bars and then sustained a little bit, but had kind of like it looks kind of like a pyramid, right? We slowly, or I suppose in this case kind of quickly, step up and then kind of step back down the green recovery backside of the volume. This in general, to me, it kind of cancels itself out. Of course, it's leaning slightly bearish, but it's not nearly enough for me to be comfortable saying there's obviously bearish bias there, because there's not. And then as we head into the close here, we see, of course, volume pickup. That's very normal. Big rebalancing bar there, another big rebalancing bar there. That's very, very contextual on SPY. The last candle of the day and then the first candle in the after hours. That's very normal to see, actually. So what's interesting here is, again, we saw basically red movement from open to close. Of course, the day itself was flat. That's because we got that pre-market pop. But the intraday movement where the volume really comes in is what I'm mostly interested in. So bears, what were we looking for? Well, we were looking for heavy bearish bias. We didn't get that. So bulls, the price action did what it did. It faded the majority of the day. That's already done. But as far as this is concerned, I wouldn't be too upset about that if I'm a bull. Now, the 30-minute, the psychological self-fulfilling prophecy levels. Let's take a peek. Now, if you guys remember the weekend video, what we were really looking at here was the fact that we were kind of hovering right around that 50 period here on the 30-minute. And we, of course, wanted to confirm that depending on whether you're bullish or bearish. Now, we attempted to break away from that pre-market, tested it off the open, briefly held it, and then started to give that up. So bears, you guys kind of retook that, rejected twice into the close. Not horrible to see, though the break and hold could have been on better volume. It wasn't clean per se, but it got held by the bears here, as a little bit of resistance heading into the close. But it was a very, like I said, weak downside break. So listen, tomorrow, bulls, any downside test of the 200 period, want to see that hold up as support. I don't necessarily want to give that up. But really, bulls, the goal is to retake this 50 period, but what's important about that is ripping through on big volume, low volume retest, boom, high volume rip away, holding it as support. Not this weak little fade, barely hold into the close that the bears pulled off today. Now, bears, to redeem yourselves here tomorrow, if you test the 50 period, reject heavy on as much volume as possible. Off the open would be fantastic. Heading down for a test, or that rejection could then set you guys up for a downside test toward that 200 period here on the 30-minute chart. Now, the 4-hour. We take a look here, you can see that SPY is currently about minus 1.05% away from that 50 period. You guys notice anything though? This 50 period here on the 4-hour, over the weekend, guys, that really picked up its ascending trend, right? It's getting ripped upside at even a more accelerated rate now, which is something that if you're a bull, ideally, that's pretty ideal, right? Because it's just an additional psychological level of potential support, getting closer and closer to the price of the ETF, which, when it's moving upside, you of course want as much downside protection as you can possibly get. That doesn't mean you can't break it. It's just added strength. So, of course, a downside test, bulls want to hold that as support, bears want to break that downside. But what I'm really paying attention to here on the 4-hour is just holding above this level, even holding flat, fine. As long as on the 4-hour specifically, this 50 period continues to rip upside, claiming whole dollars time and time again, day after day, just getting up closer, getting some feet up underneath the ETF at these now higher levels. All right. The daily, this is the most important chart. Okay. You guys can see here. Remember the all-time highs? Now, the all-time highs are right ahead of 525. And the story here is remaining incredibly simple. Bears. What's the worst thing I think in the very short term that could happen to your peers as a whole? Just we'll generalize. Well, I think the quickest way to discourage bears would be to hit all-time highs, right? At least in the very short term, right? We're talking short term here. So bears, goal number one is reject the all-time high, meaning reject well ahead of 525, but really for added protection, get back down below that $5 increment of 520. Whereas bulls, you don't want to give up 520, right? That's kind of like the trampoline that you guys can help use to push to all-time highs. And the quickest way to discourage bears if you're a bull is get above 525, locking in a new $5 increment, but more importantly, a new all-time high. Now, implied volatility, particularly important if you trade options. Spiking a little bit here today, okay, but still sitting very low compared to the last 3 months. So IV crush still very much a thing if you purchased, especially when IV was up here, as well as if you're looking to buy new contracts. Again, it still is very low, but context is so important in IV when you're looking at buying or selling contracts, because you want to buy ideally when you're paying the least amount of Vega value, which is when IV is low compared to your intended trade time frame, right? And then ideally you would sell when IV is very high because you've now realized all that Vega pump in addition to whatever delta, pump you've seen. Which, if you're newer, the delta is just the movement in the stock, or in this case, the ETF. Now, expected move. You guys know on SPY, it is a luxurious thing to look at here because we have daily expirations. So, the expected move by tomorrow's close compared to today's close is plus or minus $3.07 per share. That's the expected volatility being priced in literally by the options traders. Okay? It's really important to understand what the market expects in terms of volatility, because then you're able to position yourself to disagree with that, along with, of course, a directional bias. So what is the directional bias coming out of the market? Well, if we look at the volume, this is a really easy way to look at this. We have a little over 5.2 million total contracts traded today. Not tremendous volume on SPY. We've seen quite a bit more, but it's, of course, still a huge sample size. 2.37 million calls, 2.85 million puts. So we are seeing pretty heavy, well, it's actually not as heavy as we've seen in the past, but a relatively heavy bearish bias on the overall. And if we break that down by time frame, the short-term speculators, the 0 to 20 delta range, about 771,000 calls and about 1.27 million puts. Bearish bias out of the short-term speculators as well. Listen, guys, if you get value out of these daily SPY uploads, leave a like on the video. It's all I ask. And then get out of here and enjoy your day. I appreciate it, and I'll see you in the next one.